This is the briefing for Friday, October 13th. For the past couple weeks, as I've been discussing in the briefings, we've had some basically three different strategies that I've been looking at that have a possibility of occurring in the indices. The first one was that this was a three-step counter-trend rotation where there potentially was equality between legs 1 and 3. That appears to be negated at this point in time because you can see that we exceeded that equality to some degree by about 10 points in the spiders. The second possibility was that this is just a rotational pattern, and we're just going to see rotation up and down and up and down until we see a breakout of this area from the spiders in the 458 area to the 420, 418, 420 area, until we see a breakout of that area. And I think that is becoming a lower probability, although it is not certainly precluded from being a potential strategy. The third one, and I talked about this probably going back into the end of September, was that when this high was not taken out, that left the two possibilities of equality between legs 1 and 3, or it left this as a fairly bearish price pattern. Now, based on that, if that's the case, and I still think that there's a good possibility that it could be the case, the market needs to see some impulsiveness to the downside. If that doesn't occur, and the NASDAQ, as I'll show you in a minute, probably are giving us a little bit different signal, but still I'm looking at this and really leaning towards the fact that this has the potential for a pretty impulsive move to the downside. The problem now is we need to trade through this 430 area, which we have not done for the last four days. And then once that's done, we need to trade pretty impulsively through 420. The longer we linger in this area, the lower that bearish price pattern probability will be. Now, you can see on this move up, this is what gives me some indication that that bearish price pattern is still in play. Is that you can see we moved higher here, but volume fell off pretty dramatically. Breadth was diverging as we went into this high, and then of course we've had a down day yesterday, and then today we had some follow through, but still just testing and holding above the 430 area. So going forward, I'm still watching what's happening, but I'm really kind of lingering in the aspect that this has the potential to be something pretty bearish, and that unless or until we break 430 and then 420, that is a possibility. But until that happens, I am not betting the farm to the downside, at least at this point in time. Now this you can see differently in the NASDAQ. You can see the rotational pattern in the NASDAQ. NASDAQ, just instead of breaking through its lower extreme as the S&Ps did or the spiders did, it has been rotating around the lower extreme and then of course traded right up to the next level of resistance at 370, 372. And then it has backed off from there. So it's going to be interesting to see what happens with the NASDAQ. Now, equality between 1 and 3 in the NASDAQ was right down at this 347, 348 area where this red trend line is. And you can see it didn't make it. So the Qs or the NASDAQ are really giving us a different kind of picture, that the higher probability is potentially that this is a rotational pattern. Now, the key to the bearish pattern, if this is the case, and this does have a bearish price pattern to it, is breaking through this 355 area. So that would be significant, and then breaking through the equality at 347, which would open up a potential test of the 324 area in the Qs. Same thing occurred on this move higher. You can see volume fell off, suggesting that it was not attracting new buyers. Breadth was diverging, suggesting that the weakness internally was not going to allow price to continue higher unless the internals changed, and they did not. The Russell showing us a little bit different situation. It is in a longer term rotational pattern, as you can see right through there if you look at this from a longer degree time frame. But we also have a head and shoulders top here, and basically equality between legs 1 and 3 projected right down to the 175 area. And you can see it came down to there, held there, then bounced off of it, tested 180, and then traded right through it impulsively, and tested the 170 area, which was the next level of support, bouncing off again, testing the 175 area, then back down again to the 170 area. Now, in a head and shoulders top or bottom, it's typical that you can project the distance after a break of the neckline by measuring the head to the neckline. So basically, from the head to the neckline is the same distance as this high down to 165 in the Russell. So you can see that it has not made it there, at least at this point in time. Now, that doesn't have to always be the case, but it's certainly something that our technical analysis gives us the ability to project certain areas where we could expect the potential for some type of rotational pattern, rotation back up again. So I'm watching really what happens carefully around 170 here. We need to break here, and you can see that we are right at it in today's trading. Broke below it slightly, then closed right on it, going into the end of the day today. So it's going to be very, very important to see what happens in the coming week. Now, as we look at where we are in terms of overbought and oversold, we were oversold yesterday, and you can see we bounced off of that today, had a little bit stronger internal strength in today's market, really just slightly oversold in the NASDAQ. It's interesting to see in the NASDAQ that it is holding up from a price perspective as well it is, and I think that has to be attributed to some of the higher weighted stocks that are holding up better than the rest of the stocks, because if we look at what's happening in terms of the percentage of stocks above their 50 and 200-day moving averages, you can see in the S&P 500 only 25% of stocks are above their 50-day moving average, and only 37% above their 200-day moving average. If we look at the NASDAQ, 21% of stocks are above their 50-day moving average, and 27% are above their 200-day moving average. That gives you a pretty good indication that the majority of stocks in the NASDAQ are potentially trading lower, and that it's holding up in terms of price better, mainly because of some of the higher weighted stocks within that index. And then the Russell, you can see the Russell only 17% above its 50-day moving average, and only 26% above its 200-day moving average. Now, one of the things that we would see if we were going to see the potential for some type of move higher would be to see these numbers within all three indices beginning to increase. So as we rally, basically you can see here we come off this low right around the 17% area. As we rally, we want to see this start to move up, and you can see this rotation here. But you can see that the percentage of stocks moving above their 50-day moving average was increasing as price was basically stalled, and then we get this break to move back up to the 200 stocks above their 50-day moving average. The same thing is true in the 200-day moving average as well. So right now we're not seeing any strengthening from an internal perspective in the indices. Even going back to the S&P, you can see a little bit of strengthening here, but really nothing to write home about, and especially in the 200-day moving average. And it came down right to this trend line right through here. This is really a rotational area, as you can see. I didn't put the trend lines up, but you could draw a line from here to here and then right through here and see the rotational pattern of what's happening within the spiders. Now, looking at total volume, you can see that total volume is beginning to pick up in the NYSE. It was really down when we were down in this area here. As price started to move higher, volume absolutely collapsed down to its average low medium, I would say. And the same thing with the NASDAQ. And in today's trading, you can see NASDAQ volume was down, so there's really no impulsiveness to this yet. But when we do see a move to the upside, the internals seem to weaken even more than they do when we see a move to the downside. Really need to see something in terms of an impulsive move fairly soon, or I'm going to be leaning more towards the fact that we are just stuck in a rotational pattern. And when we see that impulsive move, we really need to see volume coming in. We need to see some panic selling. Or, if that doesn't happen, if it doesn't happen soon, then we're potentially going to see another move back to the upside. Watch this area right through here. You can see we've got 4 days of rotation in the spiders. This high comes in right around 437.75 area. If that were traded through, I think that's going to open up the possibility of trading up to the 445 area. And then, of course, what would negate the bearish price pattern is trading above this high. This would be the 454 area in the spiders. In the Qs, it would come in right around the 381 area. And in the Russell, it's going to come in much higher. It's going to come in right around the 191, 192 area. So those levels would certainly suggest then, if they're traded and closed above those highs, would suggest that that bearish price pattern is negated and we're in a rotational pattern going back up to test the upper extremes. Have a great weekend, and I will pick this back up again on Monday.